Hi everyone, my name is Busari Abiodun. Welcome to my channel. In this video, I will be discussing about the classification of account. As we all know that as an accounting student, we have to understand how to prepare an account, and the best fundamental aspect of it is the ledger. So before we can understand ledger, we must understand the classes of account that we have. So what are the classes of account? Accounts can be classified into two. We have personal account and impersonal account. What is personal account? This refers to the account of individual or organization that an entity transacts business with. In this case, we are talking about the individual, that is those customers that has to be recognized in the book. We are talking about the organization that has to be recognized in the book of account. Those people are the account for those individual or organizations are called personal accounts. So examples of personal accounts include the debtors, creditors, capital account, and drawing account. So let's start taking them one after the other. The debtors account. If you are talking about debtors, this account is used to record the credit customers. That is, it is used to record good transactions of goods sold on credit to customer, because they are debtors. They purchased on credit from the business. An account has to be open for them in which their name will appear for the business to know what each of them is owing. That's the reason why it is being called personal account. The same thing happens. These debtors can be individual, they can be organization who purchase items from the business on credit. Let's take an example. Fadwa sold goods worth 50,000 on credit to Ajas. In this case, Ajas is a debtor. So we have to recognize Ajas in the book of account by opening an account for Ajas. That is Ajas account. How much good did Ajas purchase? 50,000 naira. That is, we debit Ajas account with what? 50,000 naira sales. Creditors account. So these are the supplier that the business purchased item from on credit. That's the reason why it is an account used to record the amount of goods purchased from suppliers on credit. So because the business is owing them, they have to know what they are owing each of these individual or organization. That's the reason why it is being termed a personal account. Let's take an example under that. Jones purchased motor van worth 120,000 on credit from Ferguson. Ferguson is a creditor. Jones is owing Ferguson, so Jones has to open an account for Ferguson in his book for him to know the amount he is owing Ferguson. So he is going to open Ferguson's account. So Ferguson is a creditor, so the account is going to be credited with how much? 120,000 naira, which is for motor van. 120,000 naira. Another example is capital. If you are talking about capital, this is the money used in starting business. It is the amount invested by the owner of the business to start a business, and it can also be additional money. That is the money introduced by the owner into the business. So in that case, the money introduced is an additional capital. So if you are talking about capital, it can also be in form of items as long as the item has monetary value, which is monetary concept of accounting. So capital is also a personal account because it is a debt which the business is owing the owner. It is one of the aspects of accounting which is separate entity. That is, there is difference between the owner of the business and the business. So in that case, any money being introduced into the business by the owner is a debt which the business is owing the owner, and that money is called capital. So in the same way, the business or the owner invests into the business, the owner cannot withdraw from the business for personal use. Anytime the owner withdraw money for personal use, it is termed drawing. That's also why drawing is also termed as what? Personal account. So anytime we are talking about drawing, we know is the money withdraw or items withdraw from the business by the owner for the personal use. So the capital account, debtors, creditors, and drawings, they are all examples of personal account. So let's take an example of capital account. Can start a business with 500,000 naira cash. The 500,000 naira cash that can use to start business is called capital. So in that case, we are going to open a capital account. So how much is it? 500,000 naira. We credit it with what? Cash, 500,000 naira. Now let's move on to impersonal account. So if you are talking about impersonal account, this is the account of assets, income, and expenses. This account can be further classified into two, which are the real account and nominal account. If you are talking about real account, this is the account of tangible assets. That is, we are talking about assets. What is asset? To a layman language, they are properties that are owned by the business. So in the standard definition, just like I defined in one of my videos, it is a resources controlled by an entity as a result of past event from which future economic benefit is expected to flow back to an entity. That is an advanced definition of an asset. So in this case, the motor van, the building account, plant and machinery, they are all examples of assets. So they all fall under what? The real account. For example, Fadnet purchased office furniture worth 25,000 naira in cash. Office furniture is an asset because it was purchased for the sake of being used. So any item purchased by the business for the sake of being used is termed assets. But any items purchased for the purpose of being sold, so they are termed sales. So you should be able to differentiate between the sales, items that are sales, or items that are purchases, and items that are assets. So in this case, the office furniture is purchased for use, so it is an asset. So we are going to open office furniture account. So how much is it? 25,000. So we debit it with what? 25,000. For you to understand how to debit or credit an account, stay tuned for my next video where I will be discussing about ledger and how to apply the double entry principle in details. So let's continue. Nominal account. Just like I said, so nominal account is the account for income and expenses. Anytime we are talking about expenses or income, you should know that we are talking about nominal account. For example, sales account is an example of nominal account. Purchase account is an example of nominal account. Salaries account is also as an example of nominal account. Sales is an income because when you sell, you receive money. Purchase is an expenses. When you purchase something, you make payment, money goes out. Payment of salaries is an expenses. Payment of electricity is an expenses. Discount received is an income. So all those income and expenses are termed nominal account. Let's take an example. Newton Limited paid salaries 15,000 naira cash. So in this case, salary is a nominal account, which means we are going to open an account for salaries account. So how much is it? 15,000 naira cash. So we are going to debit it with what? Cash. 15,000 naira. So that's all about the classification of account, and everything I've been explaining so far are what I summarized in the diagram on the screen. I said account can be classified into two: the personal account and impersonal account. The personal account are the account for individual or organization, under which we have the debtors account, which is used to record debit customer, that is those who purchase item on credit from the business. We have creditors account, which are used to record the suppliers that the business purchase item from on credit. We have the capital account, which is used to record the money contributed to the business by the owner, that is the investment of the owner in the business. We have the drawing account, which is the money or items withdrawn by the owner for personal use. All those ones will be recorded under drawing account. So at the other side, I discussed about the impersonal account, which I said is the account for assets, income, and expenses. I say if you are talking about assets, we are talking about real account. So example, you have the machinery account, motor van, furniture and fitting, etc. They are all examples of real account. Why the nominal account? Like I said we have the income and we have the expenses. Example of income include sales, discount received, rent received, and so on. Those are income. They are examples of nominal account. While expenses include payment of salaries, electricity, rent and rate, etc. Whatever expenses it is, they are all under the nominal account. That is all about the classification of account that we have. In the next video, I will be discussing in details what a ledger is, the double entry principle, how to apply double entry principle, and how to extract a trial balance from the ledger. So